Before we get into today's video, some regulatory compliance. My name is Andrew Alexander. I am Head of Investments for Three Counties, an independent financial advisor based in County Durham, England. This video is for anyone who has an interest in investing and investment markets, both retail clients with no experience of investing through to industry professionals who invest for themselves and their clients. As independent financial advisors and wealth managers, there is no commercial relationship between ourselves and today's guest. The purpose of this video is educational, and in no way should any of the content be construed as advice, nor is it an enticement to invest. Past performance is not a guide to future performance, nor a reliable indicator of future results or performance. The value of investments may go down as well as up and is not guaranteed. Therefore, investors may not get back the amount originally invested. And now, onto the video. Welcome everyone to another of our weekly investment manager videos, and many thanks once again for tuning in. COP26 is well underway with delegates from all four corners of the globe hanging around in Glasgow. But how will the outcome from these events affect investors' portfolios? And perhaps more importantly, what opportunities will present themselves? To assist us in traipsing through this huge topic, Katie Magee, investment specialist from JP Morgan, will answer these questions and possibly more. But first, before we get into the content, if you are enjoying our channel and you haven't subscribed yet, it would be wonderful if you could. It genuinely really does assist us in delivering this weekly content to you all, and hopefully you'll press the button somewhere along here. Anyway, onto the content. Katie, many thanks for joining me today. COP26 is, like I said, taking place in Glasgow this week and next. What are some of the topics coming out of the event, and how are you thinking about them from an investment perspective?
Great. Well, thank you so much for being here and for everyone tuning in. Really excited to be part of this. And actually, when we think about COP26, you hear that term thrown around a lot. What actually is it? Well, COP stands for Conference of the Parties. Anyway, it's a climate change conference. It's the UN's annual climate change conference, and this is the 26th meeting. So that's where the 26 comes from. And part of the reason why it's so exciting and monumental is that at COP21, which was held in Paris, is when the parties came together to really agree the Paris Agreement. And as part of that, they all committed to signing up to each of their own contributions, what they could do to address climate change. And they also said, let's revisit this every 5 years. And so this meeting was supposed to take place last year. It's now been delayed a year because of the pandemic. But this is that chance for all the parties, all the countries around the globe to really come back and revisit what they're doing, see what more they can do, how much more aggressive they can be around climate change. Now, climate change is certainly a topic we hear a lot about. What are we actually facing here? Well, some of the realities here are that climate change is really already happening. Temperatures have already increased by about 1.1 degrees relative to pre-industrial levels. And every single year, human activities generate about 50 billion tons of greenhouse gases emitted into the atmosphere, furthering climate change. Now, one of the challenges we have there is that our global demand for energy is actually increasing. We expect it to increase by about 50% over the next 30 years. And that's really kind of a good thing. It means that economies are developing, people are moving into the middle class. So kind of good from a social angle, but does make the challenge hard. So now to get back to your actual question, which are what are the aims of this? What does it mean for investors? Well, the COP26 team basically came up with 4 key agenda items, 4 key goals they wanted to achieve. And one of the biggest ones, the first one actually, was mitigation. So it really is encouraging people and governments to support this transition to more cleaner and more renewable energy sources. It also specifically points out things like an investment into electric vehicles and a disinvestment from areas like coal. And so we're seeing today a lot of exciting opportunities in that, these newer solution providers that we're going to need to see investment made into if we want to tackle this climate change challenge.
Now, you mentioned obviously the rapid increase in energy usage, and obviously understanding what COP26 is all about, using more clean and renewable energy sources will be a key part of this. What are your views on this space?
Yeah, that's a great point. And we're actually starting to see that happen somewhat naturally as well. When we think about the costs of solar and wind power, they have come down dramatically over the last decade. So now it costs effectively just as much to use renewable sources as it does with traditional fossil fuel sources. So that's a positive here. The technology is getting better. The electricity sources are becoming more cost effective and more reliable. That said, we still need a huge investment here. And so when we're looking out at the investment landscape of interesting companies we would want to be investing in, that does include generators of renewable energy. But it also includes a much broader landscape of different things that we need to invest in to make this energy transition possible. For example, if we're all using cleaner energy, if we're driving electric cars, using more electricity, we need a pretty meaningful investment in the electricity grid.
Absolutely.
And we need the high voltage cables that help us transmit that energy around the globe. So there are all these knock-on effects of, it's not just as simple as investing in a wind farm, for example. We need to think about all the component pieces that go on there. And actually, that's where we're seeing a lot of interesting and compelling investment ideas as well.
Okay. There's always a lot of focus upon the energy sector, understandably, but what are some of the other investment opportunities you're seeing within climate change out with that sector?
Yeah, that's a really good point, because when we think about the overall composition of where our greenhouse gases are coming from, what are the biggest drivers of greenhouse gas emissions? Energy is obviously a big component of that. About 70-75% of that is coming from energy. But it's coming from areas like electricity and heat, an obvious one, I think, for many people. But it's also areas like the buildings that we live in. It's the transportation that we're using. And actually areas like agriculture, for example. Agriculture contributes about a fifth of all greenhouse gas emissions. That's coming through things like fertilizer use, like compounded by deforestation. Actually, cows and cattle themselves are responsible for about 3.5 billion tons of greenhouse gases just from digestion, which is pretty gross. So we're investing in lots of innovative companies here, whether that's electricity or electric vehicle producers or battery power producers that feed into that. We're also looking at companies that are thinking about things like the heating and ventilation and air conditioning systems in your house. If we make more energy efficient versions of those, that's a huge impact on our greenhouse gas emissions. Or thinking about the agriculture sector, for example, there are a lot of big players out there today that are focused on an area called precision agriculture. And so here they're looking at new technologies using AI, drones, mapping software to really help farmers map out and monitor their crops at an individual, almost seed level, so that you only have to water and fertilize those plants and crops that actually need it, which is great for the farmer because it improves their yields, improves their business model, but also better for the environment because it's really helping to reduce the environmental impact of those farming practices. So the opportunity set here is really vast. It's not just going to be about renewable energy, though that is obviously a key and important component of this.
Yeah, that really is focusing down on the detail of things. That's fascinating. Finally, to round up, how are you and your colleagues at JP Morgan identifying these investment opportunities that you've touched on today?
Yeah, that's a good question, because even once you start peeling back the layers on all the innovative new solutions that we need to make and this huge investment that we need to make, more than $100 trillion is expected to need to move in this direction over the next 30 years to make this shift. You start getting yourself a pretty big list of potential ideas and potential things that need to be done. And so that's why we've taken, I think, a relatively innovative approach to identifying these opportunities. So we combine quantitative data and analytics. We use a tool that we've developed here, which is called the Theme Bot, the technology system that allows our portfolio managers to go in, search for a potential theme or idea they want to invest in, and it will scan through tens of millions of data sources,
Mm-hmm.
looking at company reports, broker research, earnings transcripts, and finding these companies wherever they exist that might be relevant. But then from there, we want to do fundamental research, engage with these companies, work with the sector analysts that we have around the globe, and really ask ourselves the questions to make sure that this is a business we truly want to own, to make sure its sustainability characteristics are what we would expect from it. But also think about things like valuation and sizing in an overall portfolio context. All of those things are really important. And that's why I think we need the benefit of this research-driven investment approach to finding opportunities.
Yeah, absolutely. I couldn't agree more. I think that knowing what the opportunities are and appreciating how the technology is developed globally in order to assist the solving of these global problems is one thing, but then having the investment knowledge and the team and the resource and the backup to be able to actually drill down, selecting the best opportunities you possibly can do, because at the end of the day, investors are looking to make a difference. There's no doubt about that whatsoever, but they're also there to make money. Investment isn't a charity. It's about delivering on the returns, especially in this backdrop of rising inflation as well, which is a completely different story, which possibly we'll touch on another time. Katie, it's been an absolute pleasure to talk to you. Thanks so much for your time today. You stay safe, and I'm sure we'll catch up soon.
Excellent. Thanks so much for having me, and thanks everyone for joining.